Most viewers hear April 15th, 2026 Clarity Act procedural push tied to White House and congressional vote whip coverage and assume the story is obvious. It isn't. The headline sounds bullish or bearish on the surface, but the real move usually starts when the market reprices the hidden mechanism underneath it. This setup matters because what 500 XRP could be worth after two urgent April 15th clarity moves is not just a headline story. It can change the math for 500 XRP faster than most holders expect. Stay with me because the key signal is not the loudest one. It is the one that changes what happens next. By the end of this video, you'll know exactly which signal matters most and what it means for your next move. And I'll translate that into real XRP holder math with concrete upside, downside, and positioning scenario. Here is the setup. The market is watching a procedural clarity push tied to April 15th, and it is also watching whether the White House and congressional vote whip coverage start lining up in public. Those are not the same thing. The first move is legislative motion. The second move is political commitment. If only one appears, XRP probably gets a reaction. If both appear together, XRP could get a repricing, because the market would no longer be looking at endless fog. It would be looking at a pathway. That is the difference between a trade and a thesis. Now pause. Price does not wait for perfect certainty. It usually moves when uncertainty becomes measurable. That is why a procedural push matters more than many retail holders realize. Big money does not need final victory to start building exposure. It needs a timeline it can model, compliance language it can study, and enough political alignment to believe the process is real. That is where XRP gets interesting. The market has spent a long time pricing XRP with a legal discount attached to it. A visible April timetable is one of the few things that can compress that discount fast. Even before the endgame fully arrives, think about how institutions behave. They do not wait until the public has absolute clarity and then race each other at the exact same second. They work in layers. First comes internal attention, then risk review, then scenario modeling, then limited positioning, then broader product confidence. A procedural clarity move, especially if it is tied to real vote whip pressure and White House visibility, can be enough to push that first layer into motion. That matters because markets often reprice on the first layer, not the last one. Retail traders keep waiting for the ribbon-cutting moment. Professionals start moving when the probability tree becomes legible. So let us break the two moves down in plain English. Move number one is the procedural push itself. That means the story is no longer just people talking. There is an observable legislative step on the calendar. Move number two is the part many holders are treating too casually: coordinated seriousness. If the White House and congressional leadership are both tied into the vote whip narrative, the market reads that as intent, not guaranteed victory, but intent with structure. And in markets, structured intent is a lot more valuable than loud opinions. Here is the first scenario. Only one move lands cleanly. Maybe there is noise, maybe there is a procedural headline, but the political backing still looks fuzzy. In that case, XRP can still spike, but it is more vulnerable to a quick fade because traders will ask the same question they always ask: is this actually becoming actionable, or is this just another date people are overreacting to? In that softer scenario, a move higher can still happen, but it is usually a trading move before it is a regime change move. That means excitement first, follow through second, and often disappointment in between. Now the strongest scenario. Both moves show up in a way the market can see. There is legislative motion and there is visible political effort around it. That is where the framing changes. XRP stops looking like a coin waiting for a miracle and starts looking like an asset moving through a narrowing bottleneck. The market does not need a final stamp of perfection to respond to that. It needs enough evidence that the range of uncertainty is shrinking. If that happens, the repricing window opens wider than most casual holders expect, because it is no longer just crypto traders reacting. It becomes a broader market question about timing, access, and positioning. And this is where the bag math becomes very personal. If XRP is $3, 500 XRP is $1,500. If XRP is $5, that same bag is $2,500. If XRP reaches $8, 500 XRP becomes $4,000. At $10, it becomes $5,000. That is not life-changing money for everyone, but it is no longer trivial money either. The reason this matters is simple. Many viewers treat 500 XRP like a random small stack, when in reality, a regulatory re-rating can make a modest bag suddenly worth paying attention to. Now, step 1, level up. If you hold 1000 XRP, those same price levels become $3,000, $5,000, $8,000, and $10,000. If you hold 5000 XRP, the numbers turn into $15,000, $25,000, $40,000, and $50,000. That is why regulatory timing matters so much more than generic hype. It moves the conversation away from vague optimism and into practical scenario math. Comment with your XRP bag size range or the bag you are targeting, because this is the point where the headline stops being abstract and starts becoming your own plan. If this breakdown is helping you connect headlines to real holder math, hit like here, because most people are still reacting to noise instead of the sequence behind the move. Now let us deal with the institutional angle the right way. A clearer regulatory path does not mean every giant asset manager suddenly announces XRP exposure. It does not mean a rumor becomes true overnight. It does not mean adoption appears in one clean headline. What it can mean is that legal teams, custody teams, tokenization teams, treasury desks, and product committees stop treating XRP like a file that must stay buried at the bottom of the stack. That shift sounds boring. It is not. A boring shift in institutional process can produce a very non-boring shift in price. This is also why the BlackRock rumor cycle keeps pulling attention even when the rumor itself is shaky. The deeper issue is not whether one firm does one specific thing tomorrow. The deeper issue is whether the environment becomes clean enough that major firms can model digital asset exposure without feeling like they are stepping into a policy fog bank. XRP benefits if the conversation moves from can we even touch this to under what conditions would we use this. That is a much stronger question. It is also a much more investable question, and it does not stop there. A stronger clarity path can feed into adjacent XRP narratives that the market already watches closely. Trust bank possibilities, bank-grade payment rails, settlement utility, and institutional positioning into later disclosures. This is why one April date can matter beyond the date itself. It can reorder expectations. If policy looks more dateable, other storylines become easier for the market to take seriously. That does not guarantee immediate adoption. It does increase the odds that the market starts pricing future utility before utility becomes obvious in public data. But here is the uncomfortable part. If April 15th disappoints, the downside math also becomes very real. If the procedural push looks weak, or the political backing looks performative instead of committed, traders may unwind the excitement fast. In a disappointment scenario, 500 XRP at 1.50 is $750. At $2, it is $1,000. For 1000 XRP, that same softer range is $1,500 to $2,000. For 5000 XRP, it is $7,500 to $10,000. That is why viewers should not hear this as a promise. It is a map, and maps are only useful when they include the wrong turn. Now let us resolve the open loop from the beginning, because this is the detail most holders are missing. The second move matters more than the headline, because the market is not only asking whether clarity advances, it is asking whether the advancement looks coordinated enough to create a believable timetable. That is the hidden lever. A date by itself is weak. A date backed by visible political alignment is stronger. Markets can model stronger. Institutions can discuss stronger. Traders can size stronger. The hidden value is not the headline. It is the timetable credibility created behind the headline. That is why the obvious interpretation and the real implication are different. The obvious interpretation is that April 15th either passes or fails in a dramatic all or nothing way. The real implication is that April 15th can change the market structure around XRP even before the final destination is reached, because it changes how participants rank probability. If probability improves from vague to measurable, the asset can re-rate before the public feels emotionally certain. That is how people end up watching the move after it already started. One more thing, do not confuse first repricing with final value. Even if XRP gets a regulatory boost from these clarity moves, the first move is usually the market pulling forward expectations. Then comes digestion. Then comes the question of whether institutions actually keep building into that new framework. This matters for holders because it changes how you should read strength. A sharp move can be the beginning of a larger re-rating, or it can be the market overshooting before waiting for the next proof point. Either way, the job is to think in windows, not fantasies. So what should a real holder take from this right now? If you have 500 XRP, this week is about understanding leverage in a small bag. A move from $2 to $5 changes 500 XRP from $1,000 to $2,500. A move from $2 to $10 changes it to $5,000. If you have 1,000 XRP, the same logic doubles. If you have 5,000 XRP, it becomes meaningful portfolio money. That does not mean you chase blindly. It means you stop pretending regulation is just background noise. For XRP, regulation has always been part of the value equation. And if you are still building, this is where discipline matters. A 250 XRP addition at $3 is $750 of exposure. A 500 XRP addition at $2 is $1,000 of exposure. Those are not tiny decisions. If the market starts repricing on a policy timetable, small bag choices compound when the narrative shifts. That is why the practical question is not only will XRP move, the practical question is whether your current bag size matches your conviction about what an improving regulatory path could do over the next phase. My base view is simple. April 15th matters most if it converts uncertainty into a schedule. If we get that, XRP holders should stop thinking only in headline reactions and start thinking in repricing windows. If we do not get that, the market may punish overconfidence fast. Either way, the bag math is real now. Subscribe if you want the follow-through after April 15th, because the first headline is only half the story. The second half is how the market reacts once the timetable becomes clearer or falls apart. Now the payoff is clear. Clarify what changes next, why it matters now, and how a real holder or stacker should think about the move. What this means for you is straightforward. If you hold 500 XRP, this changes how you should think about your position, your timing, and your next move. Real XRP holder bag math with concrete downside, upside, and positioning implications. That is the part most people miss, and it's the reason this setup matters beyond the headline. That is the key takeaway. The opportunity is not hidden in blind hype. It is hidden in understanding how two specific clarity moves could change the way XRP is valued before most people realize the framework itself has shifted. For a 500 XRP holder, that can mean the difference between spare money thinking and strategic money thinking. And that is exactly why this week deserves your attention.